Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest updates of the stock markets in trade today. Also to share with you which are the sectors and the stocks that are buzzing the most in trade and what should be your investment strategy and approach to the markets as we head towards the close of the year and at the beginning of the new year as well. But let's first begin the show with the biggest corporate voice on India Today, the biggest corporate interview of the year 2022. India Today's editorial director Raj Chengappa had the chance to speak with Asia's richest man and Adani Group chairman Gautam Adani. And in this exclusive interaction, he spoke on a whole host of things, including the group's robust financials, on his relations with the Prime Minister Narendra Modi, also sounding very sanguine on India's growth story. Gautam Adani expects India's youth to drive the growth forward in the years to come. And on the debt front too, he attributed the company's profitability, which has witnessed a twofold growth versus their debt as well. And here's a slice of that conversation. Listen in.
Let us also look at another concern that has been raised by some of your critics, that the Adani Group is highly over-leveraged. It has a debt of close to 2 lakh crores. What gives you the confidence that you can maintain this debt and repay it?
See, Raj, I must confess that I am greatly surprised by the conversations around our debt. We are financially very strong and secure. Such noises are coming mainly from two categories. The first category is of the people who are not doing deep diving to understand the detailed nuances of debt and finances of company. I'm sure if they make an effort to understand the financial statements, all the misgivings about debt will disappear. However, there is second category of people with a vested interest, deliberately creating confusion and misunderstanding to tarnish the reputation of the group. The fact of the matter is that in the past 9 years, our profit has been growing at twice the rate of our debt, and because of which our debt to EBITDA ratio has come down from 7.6 to 3.2, which is a very, very healthy for a large group where most of the companies are in the infrastructure space with an assured and a predictable cash flow, unlike in a manufacturing. It is for this reason that not only national but international rating agencies have rated us equivalent to India's sovereign rating. It is a matter of great pride for me that no other business group in India has as many companies as the Adani Group, which has sovereign ratings. Raj, you are well aware that rating agencies, and particularly the international ones, are very conservative and stingy in giving rating, and they have a very, very rigorous and robust systems and processes of a financial analysis. To share with you, it is for this fundamental financial strength of our group that we were able to close the ACC and Ambuja cement deal of $10.5 billion in a record time in less than just 3 months.
All right, so that you did hear Chairman of the Adani Group, Gautam Adani, really talking about the strong fundamentals and financials of the group right there, completely believing in the growth going forward as well. But let's get back to the markets as we speak. 1240 right now in the market, still about 300 points down as far as the Sensex is concerned. 60,611, 18,024 for the Nifty right now, down about 100 odd points. There's a 0.5% cut that you're seeing at this point in time in terms of the sectors of the Nifty. You will do see that, most of the sectors, in fact, all of the sectors are down in the red, led by the losses in the realty pack today. Of course, apart from that, it's the FMCG basket that's also seeing some sharp cuts right there. Metals are taking a beating. We also have the pharma that is down in trade and also cuts all along right there. In terms of the broader market space, the mid cap and the small cap 100 indices, both of them are down in trade. It's the mid caps that are underperforming the most with 0.8% of a cut at this point in time as well. In terms of the advanced decline ratio, clearly the declines are taking the lead here. 43 declines to 7 advances as far as the Nifty 50 stocks are concerned. Where is the pressure really building up from in terms of the individual stocks, in terms of the top losers on the Nifty pack? You will see a lot of cement majors, metal majors that are declining in trade. So you have Hindalco, Ultratech Cement, there's Tata Motors, Tata Consumer. So the Tata Group stocks also seeing some kind of a cut. Apollo Hospitals down by 2% odd as well. What's gaining on the other hand is ONGC, Bharti Airtel, SBI, Tata Steel and HCL Tech, some small gains on these stocks in today's trading session. But time now to welcome our guest for the day. Chandan Taparia joins in from Motilal Oswal Financial Services. Good afternoon, Chandan, and thank you so much for taking the time out for this discussion. Well, it's the expiry day, not clearly looking very, very appealing at this point. How are you reading into the signs that we have been getting? Of course, this whole series of December has been tepid. There has been some kind of a numbness right here. Help me understand, how have you analyzed this entire series? Is it the China factor? Is it pure profit booking? What is your sense?
Yeah, thanks, Sakshi. Thanks for having me. So if I talk about the December and this entire year as a whole, in this year, we are up by around 4% on YTD basis. If you look at the last 12 months, 7 months we were negative, including the December, and only 5 months we were positive. But the good part is the declines were being bought. The major decline happened at the mid of the June, and those declines were being bought. So the clear trigger for the market, or the conclusion for the market, was the dips could be bought, but upside likely to be kept. And the same we have seen in the month of December, where index has corrected from higher levels. If I look at expiry to expiry basis, we are down by around 2.5%. And recently, the index, which made the high of 18,887, has corrected all the way to 17,777. So we have corrected from highs, but now we are taking support at the lower zone. But again, the concerns are is we are heading towards the year end. Fall off is totally missing. So as of now, I look at the hurdle of 18,181. If those levels are surpassed, then only we can consider this bottom to extend the rally to us 18,350 to 18,442. On the downside, we need to closely watch the support of 17,777. So to sum up, 17,777 to 18,181 is the range. If 18,181 is surpassed, then only we can consider it for the next leg of upside move in the market. So one need to approach the market in that light note as we are heading towards the end of the year, and we'll see the even beginning of the year with the dull or slight choppiness kind of note.
Sure. Now, as we move into the next series, January series, into the new year, what to your mind will be the dominant theme right there? Will it be China again? Will it be the recessionary fears? Or will it be the pre-budget moves that we will be expecting? Your thoughts?
So if you look at the overall market and the volatility, because when you talk about the couple of things which are making the greed and fear, then definitely I'll talk about India VIX. Your India VIX is now near to 15.5. And we have seen a spurt in last week by 15 to 16%. So volatility slightly recovered from the lows, and because of that, the market is also finding tough to hold at higher levels. So obviously the global market and China concerns are there, but I think dips could be bought because of the budget. So budget, China theme, these are likely to be the key trigger, and then India VIX will provide the sentiment and market eternal to goes the same. So I think these are the factor one need to keep track, and these are likely to give the setup and the momentum to the market.
Okay. And as for the strategies for investors for the new year, what would you really recommend the right way to really approach the markets in the next year?
So, see, there is no doubt about the outperformance of India. In this year, we have seen a consolidation. 2020, we have seen good recovery. 21 was the perfect bullish year. 21 was more of the sideways, but dips were being bought. So I think after the rally of last 2 years, this year was a sideways, and again the next leg of rally cannot be ruled out in the 2023. And Sakshi, if I look at the data set of last 20 years, in last 20 years, only 3 years the index closed negative on year-to-year basis. So I don't see any reason that why should market go much down. Yes, global concerns are there. So to sum up the same, I believe decline could be bought in the market. As of now, 17,777 is the major support. Any decline towards the same could be bought. And I believe that after the consolidation of couple of days, the index will head towards 18,442 and 18,881. So going forward in 2023, we believe that market has potential to move by 8 to 10% from current levels after the good consolidation of 2022.
Right. And also, where should the money be really flowing to in terms of the sectors? Which are the top 3 sectoral preferences that you would have for the new year?
So definitely we'll focus more into the banking and financials. So Bank Nifty, which already outperformed in this year, up by around 20%, likely to continue their momentum. So Bank Nifty is one space where we will focus. In Bank Nifty, PSU and private both will be preferred sectors. So I believe both will do the positive stance. So banking, financials, and apart from that, we'll focus on the fertilizer. However, most of the fertilizer has really done well, but still there is a scope. And I believe, and many times we have talked about the fertilizer name in our source, including FECT, RCF, NFL, all these stocks are in focus. So because of the budget, fertilizers, because of budget and outperformance, your banking and financial, and then selective auto names could be in limelight as a theme over the next 1 month to 1 quarter.
Right. In fact, I wanted to really take your names, if you could give us about 3 to 4 names that are on top of your radar where you really feel these are the stocks that are supposed to be had in your portfolios as we move into 2023, where huge money can be made despite the overall macro concerns, and we do not know which direction is the market going to really take because of the macro factors, a lot of uncertainty still on the COVID front and on the recessionary fears. But despite all of that, a few stocks that you are really believing that, next year could be the year for these stocks.
Yeah, so Sakshi, we need to understand that volatility is the part of opportunity, and every decline could be bought well in the Indian markets. We believe the same is going to happen in 2023. So if you talk about auto name, we'll focus in TVS Motor, Escorts. So if I talk about the Escorts, again, the budget could be related to Agri, and Escorts is the good name in auto and Agri both. So I think with support of 2,000, you have potential to move towards 2,300 in Escorts. So this is the one idea we will talk about in auto pick. Apart from that, fertilizer could be in focus. So I'll talk about the name like Chambal or FECT. However, FECT has really done well, related by more than 150%, but still momentum could be there. With support of around 325, this stock has potential to move towards 385 to 400 level. Apart from that, banking counter, we will be keeping on radar. ICICI Bank, I'll focus. Recent decline is now likely to take a hold. Near to 870, 880. We can see the buying opportunity for the rally towards 950. In FMCG, I'll talk about Godrej Consumer Product. So Godrej Consumer Product is now giving a consolidation breakout, holding well, decline could be bought. So buy near to 860, 870 for target of 950. So Escorts, Godrej Consumer Product, ICICI Bank, and fertilizer names. These are the preferred pick out of the banking, financial, and fertilizer sector as a whole.
All right. Well, in just today's interaction, then, today's move, the cement names are seeing a bit of beating right here. We've seen this huge consolidation. You did hear Gautam Adani also talk about the cement consolidation that he took out, like $10.5 billion kind of a deal run consolidation right there. How does one really approach the cement pack in the new year?
Yeah, so like I had this interview, and really there was some clarity we got from the management that how clear they are and what is the vision of the company going forward. And recently, so much corporate action I've seen in the cement counter, so that is going to be the positive trigger. And because of that, already we have seen the good run up in many cement stocks. I believe this recent decline is just because of the market profit booking, and again these dips could be bought. So I'll first focus about the Ambuja Cement. This stock has been making a strong base if I look at the quarterly chart, but recently it has corrected all the way from 598 to 486. And now it provides a good opportunity for buy on decline. So with support of 485, we can consider it to moving towards 550 kind of level. So I think this decline could be bought and positive stance could be there in the cement counter.
Okay, and for the Adani Group as a whole, I do not know how much of that I have tracked, but definitely this group has created the maximum wealth for investors in the year 2022. Your outlook on this entire group, any of the stocks that you would still keep on your watch list in the new year?
Yeah, these 2 years were quite phenomenal for the investor of Adani Group company. If I talk about Adani Enterprises, it really well by more than 120%. Major trend is positive, and nowadays this is the part of Nifty as well. So the buy flow of the Nifty could continue to add the value to the counter. So if I talk about the broader picture, 3600 is the support, and upside we are looking for again 4200.
Okay, well, thank you so much, Chandan, for being with us on the show and sharing with us all the insights on overall markets, the expiry, the new series, and the new year as well. Where are the sectors and the stocks that you're keeping a focus on, and your recommendations as well. And with that, we wrap up this edition. Many thanks, Chandan, for being with us, and I wish you a very, very happy new year to your team and to all your family members as well. We really hope that this year turns out to be really profitable and a happy and a healthy one for everybody at your end as well.
Thank you so much, Sakshi. Thanks for having me. Wish you and the entire team a happy new year in advance. May this year aid more prosperity in equity market and have a great health and wealth time ahead.
Absolutely. Well, thank you so much, Chandan, for being with us. A quick check on the markets as we close down the show. 100 points down still on the Nifty. 18,020. That's the level that you're watching at. 60,589 still for the Sensex, down about 319 odd points. A lackluster trade is what you're witnessing, but a cut of 0.5% amid all this choppiness that we've witnessed in the first half of trading session. Do we see a bounce from here, a clear trend, or will we see the markets really ending this series on a lower note? That's what we will keep an eye out on. So do stay tuned on to Business Today TV to catch all the updates on the markets and from the world of business as well. Many thanks for tuning in onto this edition.
Shifting focus to the big Q that's been dictating markets.